Hello, good morning, ladies and gentlemen. How are you all doing today? I can feel the positive energy in the air. Let's confirm that we are good to go this morning. So please type in hi in the comment section if you can see my screen and you can hear my voice clearly. I would like to see some feedback so that I can get the impression that we are good to go this morning. So let me see some comments, please. Okay, so what do we have right here in the comment section? Okay, let me see. Okay, 818, good morning, thank you. 398, thank you. Thank you very much. Okay, Rupal, dear, good morning, thank you. Hey Carrie, good morning to you. Thank you very, very much. 876, I see your comment, but I'm not sure I know what you mean there. But good morning to you too as well. I'm so excited to welcome you all to yet another promising session on the Extra Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities ahead of the New York session. And for those who are joining us for the first time, I'm so glad to have you guys around. You're highly welcome on board. What we simply do here is to come here as a family to review the financial instruments that we have been monitoring since the beginning of the week. So on Mondays like this at the beginning of the week, we normally have choose random pairs that we definitely will be monitoring throughout the course of the week. So we come here on a daily basis to see how well these pairs have been doing, share some couple of ideas on how to manage this trade and how to anticipate and know the new position on the pairs. So initially it might look a little bit overwhelming since this is the first time you are exposing yourself to this kind of situation, but I assure you that with time you will get to understand how this works and you will be able to use whatever information you have gathered here to make your personal and individual decision on all of these pairs. So thank you very much for being around, and let's dive right into the current market structure. So before we go into the details on the chart, you all know what we look out for initially. We want to be looking at the economic calendar so that we can keep tabs with the macroeconomic event for today. Obviously, whenever we have our technical positions, definitely we still need some catalyst that will drive price action, as even if we have our technical expectations and if there are no macroeconomic event or no catalyst, definitely whatever we have planned will be null and void. So in that regard, let's look at the economic calendar to see if we do have any macroeconomic event to look forward to today. And as you can see here on my screen, there are no high impact events for today that will be affecting any of the instruments that we have been monitoring since the beginning of the week. Though there is this what's it called? It is called the producer price index, which is more or less on the medium side of its when it comes to the terms, when it comes to how impactful it will be on the price action, but majority will definitely be looking forward to this event too, as well as it always gives us the average change in prices in primary markets of the US economy by producers of commodities in all states of processing. So it's also an economic indicator, and from the previous data that we have here, we have a 4.4%, and the consensus are projecting a 3.4% in that regard. So we shall be looking forward to see how participants in the market will be anticipating this event, and it will definitely reflect on the chart as price action. So with that being said here, let's dive right into the current market structure. And as usual, the first commodity we are going to be taking on is going to be the US oil. And on the US oil yesterday, we were profitable on the US oil in the last 24 hours as we saw price action hit our TP target at the $83 zone area with about 130 pips after taking advantage of the buy position above the $81.70 level. And for those who are taking advantage of this opportunity, well done and kudos to you for being on standby to catch that move. And let's quickly run through how the week has started for us on the US oil before we go into the detail for what our expectation will be like for today. You see, trying to look at how the week started always gives us a clue into where we are coming from, and then helps us to be able to gather some information on where price action is likely going to be going in the future. So talking about the beginning of the week here, this is where the week started for us on the US oil. So initially we had a situation where price was caught within a channel between the $81 MAC and the $80.45 level. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of that channel to the upside for buying opportunity or break down to the downside for selling opportunities. And with the case we had here, we had the sell stop order triggered with our first sell position for the week. Though the move didn't last long, as you can see here, and we moved our stop loss accordingly to secure the current position. Price action moved about 75 pips in our favor before we saw price action drop back into the entry point. Then on Tuesday too as well, we saw price action come back to retest the support line that was broken at the beginning of the week to incite a bearish move to the downside, and price action moved about 100 pips before the beginning of another bullish momentum happened, which we took advantage of here on Tuesday's New York session. Now, if you look at the structure we had here since last week, remember we acknowledged the fact that price action has been consolidating between the $81.20 level and the $79.50 area to emphasize that there is a level of indecision in this market. And to further acknowledge this structure is this beautiful demand zone we identified here yesterday, where we said we can see how strong the buyers are getting around this area, as we shall be considering that zone between the $80 level and the $79.50 level as an accumulation area. Now, with the bullish momentum that sprang out of this zone here on Tuesday, we can see how price action consistently found higher highs in this market. And during our live session yesterday, this was what we identified here. We saw this consolidation phase here, which appeared to have transitioned into an ascending channel. And what we said here yesterday is that we want to be seeing a breakdown retest to signal a retracement phase. And what we said here is that we are not going to be joining any move unless we see price action come back to retest the structure to incite a wave to the downside. That did not happen, as you can see here. And with our buy stop order above the $81.70 level, we had the second buy position for the week. And as you can see, we saw our price move significantly well in our favor with about 160 pips in that direction before we begin to see the situation here. As soon as price tested the $83.37 level, we begin to see sell pressure resume around that area, and this has resulted into a situation here where price is caught within a very tight range between the $83.37 level and the $82.80 area. So this has lasted for the last I think 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 For the last 16 hours, we have seen price action trapped within that range. And you all know what we look out for whenever we find price action trapped within a flat channel like this. We'll have no choice than to remain patient to look out for either a buy opportunity at the breakout of the resistance line of that channel, or a selling opportunity at the breakdown of the support line of that channel. And as the case is right now, we need patience here. We need price to remain patient. We are waiting for a signal to happen. And one thing about this structure here, this flat channel here, it's important that we see it as a potential. It could either turn out to be a trend continuation pattern, and also it could turn out to be a reversal pattern. Now let's talk about the reversal expectations here first of all, before we go into the bullish expectation in this market. Now, if we look at the impulsive move that started a couple of days ago here, you would agree with me that a retracement phase seems long overdue in this market. Remember, yesterday we were expecting probably a retracement will start after citing this consolidation phase here, which actually did not happen. And now that we have another consolidation phase here, will this be the time for a retracement phase to happen? As you all know, from a psychological point of view, whenever price is taken from a lowest point, that is those who are taking advantage of this move right from this area or this structure here, will at one point want to be doing some profit taking activity, which will definitely reflect on the chart in the form of a retracement phase into structure in anticipation of another wave of bullish momentum. So if this channel that we have between the $83.37 level and the $82.80 level will turn out to be the beginning of a retracement phase, then we want to see a breakdown of the $82.80 level. Remember, we are not getting too excited at the sight of the breakdown of that structure, as we still need some confirmation to happen to give us that confidence to join a counter trend opportunity. And this is likely going to be coming in the form of a retest of structure. So once we witness the breakdown of the $82.80 level, what we want to be doing next is to scale down to a much more lower time frame. It could be your 5 minutes, your 10 minutes, or your 50 minutes time frame, to look out for confirmations that will give us that leverage to join that decline. So like I said, we are likely going to see retest of structure on our lower time frame, where buyers are finding it difficult to climb above either the $83 mark or the $82.80 level, which will definitely reflect on the chart in the form of selling pressure below the structure, after which we can join that decline to the downside. So talking about TP target for the sell position, well, we already identified somewhere between the $81.36 level and the $80.20 area, where it falls within the golden zone area. And when I talk about the golden zone area, what I simply mean is the a retracement into the area between the 50 and the 78.6% of the previous impulse leg. So for the sake of clarity, and for those who are joining us for the first time, so what I simply mean here is that whenever we sight an impulsive move like this and we are expecting a retracement to happen, all we do is bring out our Fibonacci retracement tool, run it through the previous impulse leg here, as you can see here, and we aim at an area between the 50% of the previous impulse leg and the 78.6, which is that potential TP target zone for sellers. Mind you, we are selling only if price action breaks down, retest the $82.80 level. So let's keep this in mind while we remain patient to wait out for a signal. Now, since we have a TP target around a potential TP target within the zone here, I'm of the opinion that if price action drops into the structure and the appearance of buy pressure resumes, where price action evolves into a reversal pattern, it could be your double bottom structure. It could be your head and shoulder pattern, whichever case it may be. We will be getting ready to join the beginning of the second wave of that bullish momentum that started at the beginning of this week. So that is how we are going to be joining any trading opportunity if price action breaks down the $82.80 level. So that is the first perspective into this situation here. Now, the second perspective we are going to be looking at here is what happens if price action does not drop below the $82.80 level, but instead continues to find higher highs in this market. Well, like we all know with this kind of structure here, if that is going to be happening, then we might likely be seeing this whole consolidation phase evolve into a trend continuation pattern in the form of either a flag pattern or a bullish rectangular pattern. And this will only be confirmed if price action breaks out of the $83.37 level to give us an opportunity to join that trend continuation to the upside. So in this kind of situation here, since we're on a long-term bullish momentum at this point, I will be advising us to have a buy stop order sitting above the $83.37 level to be able to be part of that move if it's going to be a huge spike that will break out of that structure. So placing a buy stop order above the $83.37 level seems most appropriate at this point. Then another thing I would like to share with you here is we could still take advantage of a buy opportunity even before the breakout of the structure happens. And that depends on how price action reacts to that beautiful structure I identified within this channel at the $83 level, which happens to be a very strong key level around that area. Now, how do we intend to use this as a guide for trading activity today? Well, what I did here was to bring out my line chart, and I think I have to do some readjustment here. So hold on a second, let me do that quickly. So we have a trend line here after connecting the series of lower highs on the line chart. So we shall be bringing back our candle chart to do some readjustment to fit into the current structure here. So we have something like this. So now what I want to see here, hold on a second, let me do that. Okay. So now what I want to see here, if you look at this, it looks like a wedge, right? What I want to see here is no lower lows here, and price action breaks out of that trend line, close above that structure. As you can see here in the last 3 to 4 hours, price is here to close above that trend line. So I want to see price action close above the trend line. Then I scale down to my lower time frame. I look out for a retest of the trend line whereby pressure resumes just right above the $83 mark. Then I will be joining that bullish momentum. So this is just a way of maximizing our potential profit here if bullish momentum is going to be coming in. So it's very likely we start seeing a signal of that bullish momentum coming in when a breakout retest of this trend line happens. Then we could have our buy stop order above the $83.37 level to trigger the second position. So at this point, we would have maximized and entered the buy position early enough before the breakout of that resistance line happens. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this one. So it's a simple setup we have here on the US oil this morning. So let's be on standby to be part of that potential move if price action either breaks out the resistance line or break down the support line at the $82.80 level. So that is that on the US oil for today. Then another thing I would like to state here is to make things a little bit easy for us to be able to feel confident in whatever position we are in. So remember, we had this ascending channel here. So what I will be doing here is to extend the trend lines that's suggested both the resistance and the support line of those channel. So if I extend it out a little further, it will serve as, hold on a second. Okay. So this is the support line of the ascending channel. So if I extend it out a little further, it will serve as a trend line which we can also use to guide our trading activity today. So what this simply means is that if price action drops below the $82.80 level and we start getting ready to join a potential retracement phase, if price action continues to drop further to the downside after we have triggered our sell position, we must be mindful of the structures, the trend lines here, as it depends on how price action reacts to this level that will determine if the retracement phase will continue to the downside. So if it breaks through this trend line, then we have no choice than to be looking out for more opportunities to sell. However, if price action comes into the trend line and we begin to see buy pressure resume above that structure, probably in the form of a reversal pattern, then we will be getting ready to join a bullish momentum as price action is beginning to give a sign that that zone around that area will be a very, very good platform for another wave of bullish momentum. So let's also keep this in mind while we continue to monitor price action from the structure. So that is that on the US oil. If you have any questions, let me know right in the comment sections. I can see Valeric. Good morning to you. Good morning, Cast. Good morning, Pablo Escobar 21. Pablo wants us to do EURUSD. Okay, I'll pen that down and see if we can include it into our reviews before the end of the live session today. So I hope you stay tuned in, Pablo, till the end of the session so that you can be part of the commentaries for the EURUSD. Okay. All right. So moving on now, we are going to be talking about the US tech, which is the next option we are monitoring for this week. And in fact, in the last 24 hours, we had some couple of choppy situations that happened here, especially after the CPI yesterday. And I would rather go back into the beginning of the week here to explain how the week has started for us on the US tech before we go into the details for today. So on the US tech here, initially we had a channel between the $13,000 mark and the 13,090, which was our first structure for the week. And you all know what we look out for: breakout for buying opportunities and breakdown for selling opportunities. So with our stop orders at both ends, we saw the buy sell stop order triggered here during the New York session on Monday, and we were able to scoop some profit there as price action moved about 140 pips in our favor before price action snapped back into our entry. And during the Tuesday's live session, I told us all that since price action has broken out of that bearish trend line here, that we need to be very, very patient, as we still need some further confirmation to give us a clue of how strong the buyers are at this point. And if you recall, at the beginning of the week, we had this bearish trend line figured out, which we said we shall be using to guide our trading activity for the week. Now, with the breakout of the trend line happening here on Tuesday, I told us all that we want to see a retest of that trend line to happen before we want to be joining a bullish momentum in this market. So during our live session yesterday, we acknowledged the temporary demand zone here, where we begin to see buy pressure continue around that area. And what makes this whole structure very interesting is the fact that a temporary demand zone was identified at the 12,950. And one interesting thing about it is that it shares a confluence with a trend line that was broken earlier in the week. Now, with the breakout of the trend line, obviously, we expect that price to do a retest. We saw the retest of structure lining up exactly with that temporary demand zone. And it was at this point yesterday I told us all that we should be having a buy stop order above the $13,000 mark, as a breakout of that structure will be bringing us some buy position. And as you can see here, prior to the CPI yesterday, we saw the breakout of structure, and price moved about 130 pips in our favor before this bearish momentum came in to take us out of our position. And I hope you moved your stop loss accordingly to lock in some profit, as you would have been taking out at a small profit or at a worst case scenario of break even. Then I also told us all here yesterday that we are not going to be selling unless we have a breakdown of this demand zone, that is, price action takes out this demand zone. And I told us that we shouldn't be getting too excited at the breakdown of that demand zone, as we still need some confirmation to happen, which will come in the form of a retest of structure. And look at what happened here yesterday, exactly as expected. Following the breakdown of that demand zone here, we waited for price action to do a retest of structure, and with a sell stop order below the 12,950 level, we saw our second sell position for the week triggered here, where price moved about 130 pips in our favor before the beginning of this bullish momentum is happening here. Now, for those who are taking advantage of the sell position yesterday, well done to you for being on standby to have caught that move. And you all know the next thing we want to be doing right now is to secure the current sell position, as we might still likely see some bullish momentum coming anytime soon. And to secure this current position, I'm suggesting that we should place our stop loss anywhere right above the 12,990, so that we can give room for price action to breathe. Now, one thing that has suggested that we move our stop loss to secure this position is the fact that price action is right within a very strong demand zone. Remember, at the beginning of the week, we identified this demand zone around the 12,850 level, and you can see how price has consistently respected that level, as every attempt by the sellers to break down the structure at every point in time has been met with strong resistance from the buyers. And the same thing also happened here yesterday, as you can see here. And in fact, we had a little breakdown of the structure during the early hours of today, but immediately price action climbed to the upside. Now, the question to ask right now is that the breakdown of this 12,850, is it a sign that sellers has a potential of going further to the downside? So these are things that we are going to be looking at today. Or is this just a false breakdown, where followed by a bullish pressure here inside that price might likely continue to the upside? So these are the things we are going to be looking at today. But before we do so, let us extend this demand zone here to fit into the current structure here. So I will be moving it right into this level. So we're still within the demand zone here. So our critical and our center of focus for today is going to be between the 12,900 and the 12,850 as we prepare for the New York session today. Now, one thing about this whole structure is the fact that price action is still below the bearish trend line we identified at the beginning of the week, so which further helps us to feel comfortable in our sell positions right now. But if price action breaks out of that trend line and breaks out of the 12,900 level, then definitely this demand zone is giving us a sign that is still a very, very strong niche for buyers in this market. So in as much as we have a sell position running right now, we have moved our stop loss to somewhere right above the structure. I will be advising us to have a buy stop order above the 12,990, as if we have our buy position triggered above the 12,990, price action would have broken out of that bearish trend line for the third time this week, giving us a sign that we might likely be seeing a bullish momentum in that regard. So with a buy stop order above this area, we want to be having our stop loss somewhere right below the 12,850, which will be dovetailing to about 60 pips, 55-60 pips thereabout on that one. And then let's see how far this bullish momentum will go. So for today's New York session, we want to be buying just right above the 12,900 level. As you can see, price is still trading within the demand zone, so the potential of a bullish momentum in this market is still very, very strong. So in as much as we're looking out for buying position in this market, like you all know what we do here, we always try to ensure that we keep tabs with the sellers too as well, because we have been witnessing some bearish momentum in the last 72 hours in this market, and it was more evident during the live session, during the New York session yesterday. And considering the fact that price is still right below the bearish trend line that we identified at the beginning of the week, then another breakdown of that 12,850 level, these are beautiful signs that sellers still have some potential in this market. So in as much as we look out for buying opportunity, we need to also take into consideration, what if selling momentum comes in? Are we going to miss out on that opportunity? And what do we want to be seeing in this on this chart to happen for us to feel confident to sell? So at this point, I'm looking at the 12,850, which happens to be the last point for any buying pressure in this market. This was the lowest point buyers were able to catch and negate any selling pressure in the past. Though we had breakdown here, price climbed up. So I want to look forward to price breaking down the structure to add more sell position. Remember, we had the sell position running yesterday. We're still in the sell position. Stop loss around here, and then sell stop order again below the 12,850 will be a beautiful level to join a trend continuation to the downside. And as long as price remain below the bearish trend line here, we feel comfortable in that sell position in that regard. So you can see how this current structure we are right now is a very critical point in this market. So we shall be using these three structures to guide our trading activity for today. The first one is the 12,900, where a breakout of this level will give us a buy opportunity. Then we have the 12,850, where a breakdown of this level will give us more opportunity to add more position to our existing trade. Then we also have the trend line here, which continue to be our yardstick for trading activity, as it's going to be serving as an equilibrium between the buyers and the sellers in this market. So below the trend line is still a very good place for us to be bearish, and above the trend line will give us a sign that the trend line may no longer have the capacity to hold bearish momentum anymore in this market. So this is what we shall be looking at on the US tech for today. If you have any questions, let me know in the comment section as usual. So with that being said, here I will be moving on to the next instrument, and the next instrument we are going to be looking at today is the gold commodity. And that is another profitable trade for us so far this week. That is the gold XAUUSD. As you can see here, we have been buying the XAUUSD since Monday, though we had a sell position at the beginning of the week. If you remember vividly, the week started on a bearish note. We saw our price action started the week at around the $2,008 level, leading to the breakdown of our key level at the $2,000 mark. And because of the breakdown of that key level, we said that the bullish pressure we saw from the support line here could likely be a retracement of that impulse leg. And we said if we start seeing selling pressure around the $2,000 mark or the $2,008 area, which shares a confluence with that bearish trend line that has been supporting the bearish momentum since last week, we should be getting ready to join a decline to the downside. And with selling pressure identified around the $2,000 mark on Monday, we were opportune to have a sell stop order below the structure during the New York session on Monday, and we were able to catch that move all the way to the downside as price action moved roughly 190 pips in our favor before the bullish momentum began. And during our Tuesday live session here, we acknowledge the fact that buy pressure has resumed in this market, as we can see how the 1,989 level was so strong for the sellers that they couldn't break through that level conveniently. As every attempt by the sellers to break down that structure has been met with strong resistance from the buyers. And as you can see here on Monday New York session, we saw that sharp rejection of that area, giving us a beautiful demand zone at that point. Another rejection here during the early hours of Tuesday was another sign that we might likely be seeing a bullish momentum for the second half of the week. And this was further confirmed after price action broke out the trend line that was holding bearish momentum. So at this point, we knew that trend line may no longer be strong enough to hold that bearish momentum. And you all know what we look out for from a technical standpoint whenever we have price action break out a key significant structure like this. We expect that one point in time price is likely going to come back and do a retest of structure in anticipation of another wave of bullish momentum. And as you can see here on Tuesday's New York session, we had a buy position triggered, and at this point we had our first buy position for the week. And we continue to ride the move all the way up by adding more positions at the breakout of key structures like the $2008 mark, which happened to be our resistance line at the beginning of the week. And actually, during our live session yesterday, we saw the sell pressure resume here, and I told us all that we are going to be looking forward to see how far this retracement is going to go, as we already agreed yesterday that this might likely be a retracement of the previous impulse leg. And at the same time, we had a structure at a $2008 mark which was broken. So we said there is a likelihood that price is coming back to do a retest of the $2008 mark before another wave of bullish momentum will happen. And to further buttress this was the fact that the $2008 mark also shares a beautiful confluence with that bullish trend line that we identified at the beginning of the week. So this was what happened yesterday. We saw buy pressure resume here, and we also identified the $2011 mark during our live session yesterday, where we said if price action climbs above that structure, we should be having our buy position triggered. Now, before the CPI or during the CPI event yesterday, we saw the buy position triggered. Price action moved about 170 pips in our favor before price action dropped to the downside, and we saw that sellers were still not comfortable with the situation here as buyers continued their momentum, and price action broke out the $2011 mark again to continue to the upside. So for those who are part of this profitable move yesterday, well done to you guys for being on standby, as you will currently be in profit of about 180 pips on that first position. And if you remember vividly, I told us all yesterday that we are going to be adding more position at the breakout of the $2020 level. And as you can see here, the second position is currently running with about 60 pips. So in total, we have a minimum of 240 pips running in profit based on this current structure. So well done to you for being on standby to have caught that move. So right now, what is the next thing we want to be doing from this market? So if you still have a buy position running at this particular point in time, I think it is high time you want to be moving your stop loss to secure the current position. And the most appropriate area I think at this point is anywhere right above the $2020 level, just right above that trend line, to secure the current position so that we can give room for price action to breathe, with the hopes that we could still have a breakout of the $2032 mark. So right now, as we head into the New York session today, what is going to be our plans? How do we intend to trade the XAUUSD? Are we still expecting a bullish momentum, or is there a likelihood that selling pressure could come in? As you can see here, in the past we had selling pressure resume at the $2032 mark to incite a massive sell-off in this market. So these are the things we are going to be looking at today, right on this 1 hour time frame. And the first thing we are going to be doing here is to acknowledge the fact that price action has been bullish since the beginning of the week. And to further emphasize the strength of the buyers in this market, you remember we connected a series of higher lows here, which gave us this couple of bullish trend line, which we have been using to guide our bullish momentum. So what this simply means is that as long as price remain above this bullish trend line, we shall feel comfortable in our buy position, as there is a high likelihood that price could still come back to retest the trend line. And if it does happen, since we are having the breakout of the $2020 mark here this morning, and you all know from a technical standpoint, whenever we have a breakout of structure, there is still a chance that price could come back to retest that structure at the $2020 mark, which also shares a confluence with that bullish trend line. So the appearance of buy pressure along this structure will give us an opportunity to add more position to our existing trade, where a further breakout of the $2032 mark will be welcoming more buy position in this market. So for the XAUUSD today, we still remain very bullish on this pair as we continue to monitor price action around this area. Now, I would like to lay emphasis on the psychological expectations around this area. Remember, I made mention this. I've been mentioning this in my previous sessions on the extreme speed. And one thing I would like to state here again, for the sake of those who are joining us for the first time, is that whenever we hit a new high, just like we have just done on the XAUUSD last week, there is a likelihood that we will be experiencing some choppy situations, which will come in the form of a retracement or a consolidation phase in this market, as the emotion of fear is very, very dominant whenever we attain a new high, because it takes some time for price action to actually acclimatize with this level before they could gain some momentum to push price further to the upside. And we're beginning to see the fear in the market at this point, as majority have been doing some profit-taking activity, which has resulted in this bearish move that we saw at the beginning of during the later part of last week trading session. And we are seeing some move again. Price action is moving back towards that level around this area. So we are within an indecision phase right now, where price currently is trading within the $2032 mark and the 1,989. So this is a very, very normal thing to happen around this area. So we don't want to get anything twisted around this point. And one thing about this level is, when this retracement or choppy situations happens, it's just a way of building some liquidity for buyers to gain some more momentum to be able to strongly break out of that new high that it has found. Now, I'm of the opinion that price action is approaching this $2032 mark level today. I'm of the opinion that if it breaks out this level, we might be having a very massive move to the upside. I remember the last time we had price action at a $2,000 mark here. Remember, we saw sudden pressure, we saw choppy situations as well, where we saw price action drop to the downside. We gained some momentum, gathered some liquidity to gain that momentum that will break out of that $2,000 mark. And as you can see here, we saw our price broke out that $2,000 mark with over 300 pips in that direction. And the same thing is already happening right now after price tested a new high here. And if a breakout of the $2032 mark happens, we might likely be seeing another huge move to the upside. So at this point, I will be suggesting that we have a buy stop order above the $2032 mark, as we might not have the opportunity of joining or adding more position at the retest of structure. But if it happens later on, then we could add. But at this point, have a buy stop order above the 2032 so that we can be part of that move as soon as the breakout happens. And if at any point a retracement phase comes in, then we could enjoy the leverage of adding more position to our existing trade. So this is how we are going to be buying and adding more buy position to our XAUUSD position for today. Now, what are we going to be looking out for? Like we always do, whenever we expect a perspective, we also want to take into consideration the other perspective too as well. So let's take into consideration the potentials of sellers at this point. What chances does sellers have in this market? And what do we want to be seeing on this chart that will make us feel comfortable to sell the XAUUSD today? Now, the first thing I would like to do here is to first of all acknowledge the fact that the $2,032 mark level has been a strong selling niche in the past, and price action appears to be approaching that area. And on its way approaching that level, we have been seeing some sharp rejection of the structure where buyers are beginning to find it very, very difficult to break out of that $2,028 mark. Look at what happened here yesterday. We saw sharp rejection. We have been witnessing sharp rejection here in the last couple of hours. Now the question is, are sellers gaining momentum? Are they negating all attempt by the buyers to break out of the structure? Well, this will only be known if a breach of that bullish trend line will happen. Remember, we have a bullish trend line already, which we said we shall be using to guide our bullish momentum today. So if at any point in time price action breaches the trend line and then the $2,020 mark area here, as you can see at this point, then we will be seeing this as a bearish signal. But remember, as usual, we are not getting too excited at the sight of such a move to the downside, as we'll still need some confirmation to happen to give us the confidence that sellers are probably gaining momentum in this market. So what we want to be seeing when we scale down to our lower time frame is price action coming back to retest the trend line that was broken, or the $2,020 mark, any one of that area. But the most important pattern we want to be seeing at this level is a reversal pattern or selling pressure, giving us sign that buyers are finding it very difficult to climb back above the bullish trend line. Then we could be in to join a bearish momentum to the downside. So this is the only reason we are going to be selling the XAUUSD, and that is only the structure we want to see to sell the XAUUSD today. So if price does not break down the bullish trend line, we continue to hold on to our bullish buyers in this market. So it's a simple setup. I hope I made myself very clear here. If you have any questions, let me know in the comment section. And you would also want to screenshot my screen so that you can use it as a reference point when you're about to make your own individual decision on this commodity. So that is that on the XAUUSD for today. And I wish you best of luck on this one. So I will be moving on to the next pair, and the next pair we are going to be looking at is the BTCUSD. Remember, we've been following the BTCUSD since the beginning of the week, and we have been quite profitable so far this week, as well as we have a situation right now where price action is presently consolidating at this point. So this is how the week started for us on the BTCUSD. Remember, we had this demand zone here at the 27,850. Then we saw the consolidation phase during the early hours of Monday's live session, and we anticipated the breakout of the 28,500 for a trading opportunity. So with our buy stop order above that structure, we had our first buy position for the week on the BTCUSD. Then we added another position at the breakout of the 29,350. And we continue to ride the move all the way to the upside. And one thing we noticed here is that as soon as price got into the 30,300 level, we have been witnessing selling pressure from that area. And this whole sell pressure thing here has transitioned into a very long consolidation phase that you can see on your screen right now. So price action has actually been trapped within the 29,900 and the 30,300 level in the last 48 to 72 hours now. And at this kind of situation here, you all know what we look out for. We look out for breakout or breakdown of this channel for trading opportunity. Though we had a little breakdown of the structure here yesterday, you must have taken some sell positions here, and if you are not smart enough to get out of those trade when price action moved in our favor to move your stop loss to your entry point, you might have been taken out of that position, probably at a stop loss. But it's okay, we have been profitable so far this week, so you could still afford to take some loss around this area, as it will be insignificant compared to what we have made so far this week. So with the situation we have right now, what is going to be our plans for today? Are we buying the BTCUSD or are we selling the BTCUSD at this point? So what I simply did here when I looked at this chart this morning was to acknowledge the fact that, one, we've been citing some sharp rejection of this level, giving us signals that sellers are present around this area. If you look at the nature of these candles, they're closing in the form of a shooting star, which is a sign that sellers are still very present in this market. Even the last hour here, we saw how price action, this candle closed in the form of a shooting star. So what I did here is to acknowledge the sell pressure, bring out my line chart, connect the series of lower highs here in the last 48 hours to acknowledge that. And then if price action breaks out of the trend line, then I'm of the opinion that we might be in for a bullish momentum. So now with the situation of things right now, we already have a breakout of the trend line here, which has already happened. So personally, I would like to see something like a retest of the structure to happen before another wave of bullish momentum will happen in this market. So if a retest of structure happens, where do we want it to come into before we join that move? So if we bring back our line chart here, we have a structure around the $30,100 MAC, which also has a structure in the past here. So I will label this area 30,100 level, as you can see here, and this level has been broken to the upside already. So I want to see some retest of that structure to happen. If it does happen, then I will be looking out for buy pressure on my lower time frame. So as soon as price comes into the structure, you want to be scaling down into your lower time frame, like your 5-10 minutes time frame. Look out for buy pressure, then you could join at the site of a reversal pattern. Then buy stop order above the $30,300 level will welcome more opportunity to add more position to our existing trade. Now, what happens if price does not drop into the 30,100 for a retest of structure, and instead it continues to find higher highs? Well, at this point, I would rather wait for price action to close above the $30,300 mark before I start considering buying the BTCUSD. And why is that so? Remember, if you look at what has been happening here since the beginning of the week, price is yet to close above the 30,300. And to further buttress this, you could see the nature of those candles around that area has been of more of a bearish tone. As you can see, we have been seeing sharp rejection of that area. So for me to buy above the 30,300, I want to see price break out of that structure, then scale down to our lower time frame, and we start seeing buy pressure above this level. Then we could also see price drop back into the trend line, which shares a confluence with the 30,100, where buying pressure above the structure will welcome an opportunity to buy. And if that does not happen, and instead it happens in such a way that price drops into the 30,300, then we look out for buying opportunity above this level. So stop loss from this current structure shouldn't be anywhere beyond the 29,950 thereabouts, about 30 pips thereabouts in that regard, because price could still drop into that 30,100 at any point in time. So let's keep this in mind so that we can give room for price action to breed in anticipation of a trend continuation to the upside. Now, what happens if price does not break out of the 30,300 and instead it continues to drop to the downside? Well, we shall be looking out for selling opportunities at the breakdown of that support line here at the 29,900 to join a bearish move to the downside. And if this happens, we want to be seeing this as a retracement of that impulse leg that started last week. You would agree with me if we consider the impulsive move here, a retracement phase seems long overdue, as majority would want to be doing some profit-taking activity. I think it's high time that some profit-taking activity should happen in this market. So if a breakdown of the 29,900 level happens, then we might be in for a bearish momentum to the downside, and we already have a potential buy window here between the 29,350 and the 28,650 level to be part of another wave of bullish momentum. So if the drop happens here and the retracement happens, we want to be looking out for buying opportunity within this area at the site of a reversal pattern, within this zone to join the second wave of bullish momentum to the upside. So this is what we shall be looking out for on the BTC USD today. So I hope that we be on standby to catch these moves when they finally happen. Let me know in the comment section if you have any questions. And to fulfill what's his name again, Pablo Escobar's promise that I will be treating the EURUSD. So let's run through the EURUSD quickly before we call it a day here. So right here on the EURUSD, let's see what is happening on the EURUSD on this at this moment. Okay, that's the AUD USD, right? Okay, the EURUSD. Let's see what is happening on the EURUSD at this moment. The first thing I want to be doing is to look at the daily time frame, and this is the daily time frame here. It's been a while since I traded the EURUSD anyways, but let's look at it critically well. So this is the EURUSD daily time frame, and you would agree with me that we are at a critical point in the market right now where price action is at a selling niche, which at the beginning of the month of February we saw how as soon as price got into the 1.1 we saw selling momentum coming from that area, and right now we can see that price is back into that structure. So it is quite obvious that we only have two options. It's either price breaks out of that structure to the upside to join a bullish momentum, or we start seeing selling pressure resume below the 1.1 area to incite a bearish move to the downside. So in order to have a better perspective into what is really going on here, it's important that we scale down to our lower time frame to see how participants in this market has been reacting to the 1.1 level since the beginning of today. So if we scale down to our 1 hour time frame, this is what we will be able to identify here. So I would like to reset this one so that it doesn't obstruct our view here. So we have the 1.1 there, and price has rather been very bullish since the beginning of this week. So let me go back to the 4 hours time frame. Let's see things from a much higher time frame here. So we have this situation. If we bring out our line chart, we have a bullish trend line here. We have a bullish trend line here. Sorry, let me extend this one a little bit. And if we take this one, does it have any alignment with the current structure? I think it does. It does have an alignment. So let's candle, and now it's bullish anyway. We have two trend lines to use as our yardstick for trading activity here. Then another thing I would like to do here is to acknowledge the breakout of structure that happened at the 1.0950 level. I'm choosing that level because it's a very strong psychological level in this market. So I will choose 1.0950 level. 1.0950 level here. And since the breakout of that structure, price is yet to come back into that level. So right now I want to see some retest of structure happen. So we have a breakout of structure of the 1.0950 level. So if we follow our technical expectations here, we expect that price should come back, do a retest of structure. It could be the retest of the 1.095 or the retest of the trend line, but the most important pattern we want to be seeing around this area is a reversal pattern, giving us a clue that sellers are finding it difficult to break down the 1.0950 level. Then we could join a bullish momentum to the upside, where a further breakout of the 1.100 level could turn out to be an opportunity to add more position to our existing trade. So this is what we are going to be doing here. So if we find reversal patterns around the 1.0950 to join a bullish momentum, then we could have a buy stop order around that area, as we already have a platform that could push a bullish momentum through that structure. But if that is not the case, that is, price does not drop to the downside and instead it continues to find higher highs, we are not having a buy stop order yet above the structure, as we still need to check our lower time frame to see some confirmations that support a bullish momentum from that level to the upside. So we are not having a buy stop order above the 1.1 yet. We want to hold on for price to break out that structure with some confirmations to happen when price does a retest of that level before joining that move. And the reason why I said we shouldn't be having a buy stop order is simply because of how that level has been a strong selling niche in the past, and a breakout could turn out to be a false breakout here. So we need some confirmation to happen before we can actually open a position at this point. So let's keep this in mind while we continue to monitor price action. And another thing I would like to state here is, if price, instead of finding buy pressure above this level, instead it breaks down the 1.0950 level, selling pressure below the structure should welcome selling opportunity to the downside. And if price action gets into the trend line, we move our stop loss to secure the sell position while we wait and watch how price action reacts to the structure. That will determine if we are going to be adding a buy position at the site of buying pressure, or we are going to be adding more sell position to our existing trade at the breakdown of that structure. So that is my view here on the EURUSD for today. I hope I made myself clear. If you have any questions, let me know in the comment section as I round off and get ready to draw the curtain here for today. So these are my views here on the EURUSD, and I hope at this point we shall be calling it a day here. I'm very sure that you are all well equipped to be able to take advantage of any trading opportunity during the New York session today, as we were able to simulate all the potential trading opportunities that could likely happen in this market today. So it has been a wonderful moment with you guys today, and I wish you best of luck during the New York session today, and also look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here to review how well the pairs that we have been monitoring since the beginning of the week has been doing, and then get ready for the last trading day of the week. Do have a wonderful evening, everyone. Bye-bye.